Here, the CNBC-TV18 exclusive for you. The Finance Minister speaking at one of our events. Let's get in live.
Last 2 years, 3 years, when we weren't exactly doing the most exciting things in India. But then, fortunately for us, things have begun to change. And therefore, I do understand that today you intend discussing newer areas where we can concentrate for growth, and also newer areas where we can really concentrate for increased economic activity as far as India is concerned. Mr. Singh just now mentioned that politics is the art of the possible. It's also a phenomena, particularly when you are in governance. There is a continuous struggle which goes on with regard to how much and what you can deliver. And if you set out a roadmap for yourself, and those who want to stop you on that roadmap, if they are able to obstruct and you start blinking, then that's an important stoppage that takes place. And therefore, the new government under the Prime Minister has actually decided very clearly as to what its roadmap is. Over the next decade or more, we need higher levels of growth, and we need to translate the benefits of that growth effectively towards poverty eradication in India. And therefore, we've continuously maintained that these are not two parallel roads in the economic journey. Both have to be taken simultaneously, and both are integrally interconnected. India's service sector, last few months particularly, again have indicated doing reasonably well. And that's a sector which has never been a key source of worry as far as we are concerned. Agriculture, though there is surplus, but then we depend too much on nature, and therefore the extent of expenditure in agriculture, we've tried to increase it. It has to increase over the next few years a lot more. It's an area where we can grow much more. We need diversification. And one interesting study I recently came across, that those states in India where agriculture grew by 8% or more, the state governments have been repeated almost 3 times. And therefore, that's the key to even political success. States which have invested hugely in agriculture, Madhya Pradesh is one example, to some extent Gujarat is another example. These were traditionally not states which were very progressive in agriculture. But after their new irrigation and water schemes and the investment which has been made into them, these are states which have almost reached, Madhya Pradesh particularly over the last several years has reached a double-digit growth in agriculture. And both are states where governments have been repeatedly re-elected. And the primary reason there is the success of agriculture, and this gives us a clue for future years when we have a little surplus of resource as to this is one area we have to seriously concentrate on. Our manufacturing sector is still challenging. And it's here that we have to actually invent a key engine of growth. A lot of underemployed people in agriculture, a lot of people in rural India who want to shift over to urban or at least suburban centers. It's for them that the sector really has to be created. And this is an area where countries which overtook us, and China is the obvious example, with high manpower and labor costs in China, there is an interest which is now visible in shifting manufacturing abilities to India. And therefore, it is this sector which has to be one of the primary areas which can act as an engine for growth. Our concentration, therefore, on our Make in India program, our concentration on infrastructure, our ability to try and devise various methods of financing infrastructure. For instance, in our recent initiatives, not only did we increase the budgetary support to infrastructure, we've allowed some of the key infrastructure companies and the state departments to raise tax-free bonds by which the revenue will take the hit so that we can encourage that particular sector. We've taken an initiative in setting up our own fund where government and government companies will be a key contributory, and we expect a large amount of international contribution into that fund. We recently took an unusual initiative where one of the key infrastructure areas, the Indian Railways, the Life Insurance Corporation of India, which is a hugely cash-rich organization, has agreed for a long-term funding of 1,50,000 crores, at least the money to be kept in readiness, to be utilized essentially for railway infrastructure. And therefore, this is one area where we need to seriously concentrate on. Today morning, I was taking a review of how our highways are functioning. And these are huge legacy issues. And within the system of government, where you also have constraints on taking certain radical decisions, I came across 77 highways which were sanctioned. Not many took off. And now, by resolving the issues, I was given to understand that 24 of them have finally taken off. More than 30 are complete non-starters. So how do you facilitate an early exit and allow somebody else to come in? And some of them have advanced more than 50% and are struck up because of financing issues. And therefore, these are the specific issues in these sectors which we are trying to address. There is some element of interest I see because of our large coastline and our large volumes of trade as far as the ports are concerned. Railways I have just mentioned. I think the three sectors, the three ordinances that you mentioned, in fact, there are 4 ordinances and some other key areas where we need a larger consensus and parliamentary support. The passage of the insurance bill itself, besides bringing a lot of investment into the country, I think sends another important signal. And that other important signal is that for any country which wants to grow and grow at a target where you intend to reach a double-digit growth, it can't take you a decade to decide what your policy on insurance FDI would be. Regrettably, that's happened in India. And therefore, I am glad that we've got that issue behind us. Our mining law has been approved, and I think very shortly the sector will be thrown open. The success of both the coal and the spectrum auctions, I think this sends a very powerful signal that we've partly resolved the issue of how natural resources are to be allocated. It has to be done transparently, it has to be done in an allegation-free manner, it has to be free from suspicion. And now, recent facts have proved that probably the revenues that you get are also reasonably high. And the transfer of these revenues, and when you mentioned the art of the possible, if you see the support pattern that these legislations got, one of the key reasons why they got approved and those who wanted to obstruct got isolated, was the auctions were transparent, the auctions were bringing in a large amount of money, and this money was being entirely transferred to the states, who under the original system would have virtually got nothing. And most of these regional state governments are those which were economically less developed, and those states need money for their development. So at the end of the day, in a country like India, where state governments are as elected as the central government, it's a case of a shared sovereignty. Instead of allowing those state governments to just come with a begging bowl to Delhi and say, please help me here and help me there, in the last 2 months, the genuinely federal approach of the government, we've accepted in toto the sharing recommendations of the 14th Finance Commission, which substantially reduced the central government's revenues and empowered the states. The states are far more comfortable. In the Niti Aayog, where states only used to come for a photo opportunity, the states are now going to be a part of that decision making. A lot of schemes have been decentralized to the states. We trust our chief ministers. After all, they also have a direct accountability with the people, and therefore they will decide how they want to spend that resource. The control and command structure went. And the third very important signal was, you raise this kind of money from auctions and transfer the entire money to the states. At least 6 to 7 states are going to hugely benefit out of this. And there was no reason why those states, some of which were politically diametrically on the other side, should do something which goes contrary to the interest of their state or their people. So development of the people in those regions became a shared agenda. And I think if there was one single factor, it was this approach of the central government which enabled a large number of regional parties to support this approach and hence clear some of these legislations. And I may at this stage clarify, the next roadmap clearly is the GST. I hope that in the second part of the budget session, the GST constitutional amendment will be passed, and thereafter the empowered committee would be, along with the government, drafting the other legislations which will circulate around the country, so that within this calendar year at least we can try and pass some of those bills. I have the unfinished agenda of the Companies Act, which had made doing business quite difficult and complicated in India. So one House of Parliament has amended that law. I am hoping to get it done by the other House in the coming days in this session. And then, of course, there's the land bill. Even in the land bill, if one clearly reads the bill, there are two significant aspects. If one looks at the language of Section 10, capital A, the appropriate government, which in this case is the state government, may by notification make inapplicable the provisions of two parts of that act for any or all of the following purpose, and those 5 purposes are mentioned. So the decision whether a particular state government wants to acquire land for any of those 5 purposes, or it doesn't want to do it for any of those 5 purposes, is entirely for the state governments. And therefore, if a state government says, I will not notify any of these 5 purposes, I am opposed to this bill ideologically, they are welcome to allow their states to grow without any land availability. But can such a state government, when we all swear by cooperative federalism, stop a more progressive state government and say, I won't do it, I won't allow you to do it? So effectively, it's completely decentralized. It's for the state governments to decide whether they want the land or not. And the second point I wish to make is in the context of the point I earlier made about agriculture. that where agriculture has grown, it's paid the political dividends, even to political parties in power of the states. Most of those exemptions have been designed to help rural India. Besides security of state, which I think there is a larger consensus, nobody seriously can oppose acquisition of land for national security. The other purposes directly and inevitably help rural India. The first is rural infrastructure. It includes irrigation, it includes rural roads, it includes rural electrification. Now, if the 2013 law is to remain, for none of these purposes it is going to be very simple to acquire land. In fact, I had mentioned in the parliament, and I am repeating it, we were told at that time that irrigation at least was being kept out. But regrettably, we were misled, it was not kept out. So today, if we want to acquire land for the interest of the Indian farmer, for irrigation, for rural roads, for rural infrastructure, for rural electrification, the 2013 Act doesn't have an answer to it. Urban affordable housing and housing for poor. It's the rural migration to suburban areas where you need those people to have regular housing. Infrastructure. In fact, industrial corridors are the key to development of rural India and Indian manufacturing. So if you have a long industrial corridor between town A and town B, let's say running across 400 kilometers, a narrow corridor, half a kilometer or 1 kilometer on either side, the value of rural land and the development in that rural land, the job opportunities in those rural areas is bound to increase. So this act doesn't say rural hubs, industrial hubs or industrial parks. It's industrial corridors, because when a corridor runs across rural India, it generates employment for people living in rural India. And therefore this debate, at some stage we will have to conclude that here is an opportunity for us, at least for those states which want to implement these provisions, and they can't be stopped by those who don't want to implement these provisions. I've been repeatedly saying that cooperative federalism has to exist in India. It has to coexist with competitive federalism, where states are also competing. You can't have a situation where one state says, I will not grow and I will not allow the others to grow. That's not an acceptable economic proposition at all. I mentioned about allocation of resources, resolution of disputes in government contracts, bankruptcy law, so that the exit itself becomes easier. In the ease of doing business, there are some initiatives which are now in the pipeline, from entry point to the time gap between the entry point and the actual start of business, to the enabling environment, the exit, and to a non-adversarial taxation regime. And I do believe that these initiatives, along with various other social sector initiatives, such as from inclusion to social sector insurances and social sector pensions, the Mudra Bank, which have been taken, they actually combine the growth process and transferring the benefits of the growth process to those who need it the most in India. It's a historic opportunity because global investors, global companies are all looking at us. Particularly now that Chinese normal in terms of their growth rates has moderated a little, they are looking for other economies in the region. And historically it's an opportunity which has revisited us, and it's for us in India to use it to the maximum. Thank you. That's all I had to say. I'm told there is some interaction. If there is a clarification.
Mr. Jaitley, thank you very much for those introductory comments. Let me start by talking to you about the macroeconomic situation, sir. And I know that you're running out of time, so I'm going to keep these questions as brief as possible. Mr. Singh quoted the IMF and the ADB projections for the Indian economy. The budget itself has held out fairly optimistic growth figures backed by what the CSO's revised data estimates are. I'm not going to get into the debate on the authenticity of the CSO's numbers because those numbers have now been accepted by the government. But let me ask you this, because you yourself have acknowledged that India is a recovering economy. But if you talk about growth rates of 7.5% and 8% for the next fiscal, these growth rates suggest a resurging economy. In that context, there is a fear that maybe we could be dulled into complacency, or maybe we'll actually have the wrong policy prescriptions because the picture looks much glossier than it actually is. Are those legitimate concerns?
First of all, I don't think anybody in India has ever questioned or contested the professionalism of the CSO. In fact, I can tell you from experience that CSO is one organization which functions completely at an arm's length from the government. They devise their own methodologies. They look at methodologies which are globally compatible. After a couple of years, they revise their methodology itself. In fact, the finance minister and the prime minister come to know of the data after it's been made public. We don't even get to know of it 5 minutes before it becomes public. That's the professionalism. Earlier governments, the same experience has been there. The CSO firmly maintains, and I have no reason to distrust this, particularly when they updated the data of the last year of the UPA government also,
sure,
that they followed, they've expanded their methodology and they followed a procedure which is being done in almost all developed countries in the world. I think the data itself looks encouraging. So in terms of all the macroeconomics data, inflation broadly under control, as far as foreign exchange situation is concerned, we are comfortable. Currency, we are one of the few which is trying to keep pace with the movement of the dollar. In terms of growth rate, reasonable growth rates. In terms of fiscal deficit, we hope we have a roadmap now which is announced. We hope to maintain it. Current account deficit coming year hopefully should be less than 1. That's what the indications seem to be. But when you said, is there room for complacency, the answer is no. And it's no for various reasons. For one, as I mentioned in my opening comments, agriculture, job creation, infrastructure, manufacturing, these are all areas where we still have a lot of distance to cover. And therefore, we just can't market this data and say, well, I'm now more than satisfied. I would say I would be satisfied if India were touching a double-digit growth rate. I would be satisfied if manufacturing starts growing at a higher pace, if job creation becomes faster, if agriculture, instead of struggling at a 2%, 3% growth rate, makes a leap itself. And I think since there is a lot of distance we can reasonably cover, we've missed historical opportunities in the past. I can quite see an opportunity revisiting us.
Okay. Let me pick up on some of those points that you talked about, and let me address the issue of the currency, because this is something that you spoke about in Parliament, and we've actually seen a good week for the Indian currency with the rupee strengthening against the dollar, even though the stock markets have been on the declining side. Is a stronger currency good for the Make in India ambition, good for the Make in India campaign? I know the government doesn't target a currency range, but what is the take as far as the government is concerned as far as the currency goes?
The government would like the real value of the currency to reflect itself. And therefore, I think, and that management is done by the Reserve Bank at present. It continues to do so. It's effectively handling that situation. And therefore, I don't think the government should be unusually worried if the movement takes place a little higher or a little lower than that. We'd leave it at that, because your exports will benefit if your currency loses a little. But then there are other areas like some of your essential imports becoming costlier. You'll be paying more for the oil itself. So it balances itself out. So I'd rather go by what the real value of the currency is.
Okay, let me ask you about the Reserve Bank, since you talked about that. In terms of rate action, we've seen 2 out-of-turn policy rate cuts coming in from the Reserve Bank of India. There's a next credit policy up in April. We haven't yet seen a transmission impact on account of the previous policy cuts. I know that you've been gently nudging banks to try and move as far as rates are concerned. Do you anticipate another cut by the Reserve Bank in April?
Well,
and how significant is the rate cut going to be in order for us to achieve the kind of growth numbers that we're talking about?
Well, what is within the domain of the Reserve Bank, I'll let them have the last word at it. I mentioned a few days ago in the presence of the governor that we don't pressurize the banks to cut rates, but we do expect the banks, after assessing the situation, to act in a prudent manner. Our banks have been by and large responsible, and I'm quite certain we'll see more cuts in future. But as of today, if you ask me how much and when, it's in the domain of the Reserve Bank. I'll leave it to them. My own view has been that India needs to lower its interest rates.
I won't prod you further on that, but just a point forward on the Reserve Bank, sir. And there's been a lot of talk on whether we ought to move along with other central banks and have a fixed tenure as far as central bank governors are concerned in order to ensure financial stability. You've talked about regulatory stability. We're talking about financial stability. Is the government going to consider the possibility of a fixed tenure for central bank governors?
Well, I think let others participate in this debate, and I should speak at the very end.
So what's your own view, sir? Let's get you to start that debate.
No, I'd rather reserve my comments till the end.
Okay. Since you talked about economic legislations and you talked about the land bill, Mr. Jaitley, the land bill lapses on the 5th of April. When we last spoke to you, you said a decision hasn't been taken on whether you will re-promulgate the ordinance. What is the call now, sir? Do you re-promulgate the ordinance? Do you go back to Parliament and try and bring in a diluted version of the consent clause to bring the opposition on board? What do you intend to do as far as the land bill is concerned?
Well, you'll have to wait for the cabinet to take a decision. I can't...
So is the cabinet taking a decision this evening?
Well, I don't know. You'll have to wait after the cabinet meeting. But I think you must... one of the important aspects, if you forget these 5 new purposes which have been exempted from a complicated procedure, the original land bill, or the Act of 2013, had 13 exempted areas. Instead of 13, it's become 18. Please don't forget that this ordinance, in those 13 exempted areas, has also provided enhanced compensation. And therefore, that enhanced compensation to those 13 areas exists as long as the ordinance exists.
But you're not saying whether you have taken a decision yet to re-promulgate it or bring in further amendments, sir?
Well, I think the cabinet will take it.
Okay. Let me ask you about the infrastructure story, since that's something that you spoke about, Mr. Jaitley. The railway capex is up about 33% year on year after the budget. Defence capex for FY16 is higher by about 11%. You have talked about the tax-free bonds. You've talked about the India Infrastructure Investment Trust that you intend to set up. But by when do we actually see a turnaround as far as the capex cycle is concerned? And related to that question, since you brought up the example of roads and highways, the problem that we're facing today is a problem of broken private sector balance sheets. There was a lot of talk about reviewing and reviving the public-private partnership model. 3P India was a promise that you made in the previous budget. That decision, I understand, has been deferred for now. What can we expect in terms of reviewing public-private partnership models? And how do you address the issue of broken private sector balance sheets when it comes to infrastructure?
The public-private partnership remains always an important instrument in executing all these projects. The difficulty is that what's happened in the last few years, the impact of that, as I indicated, if you saw the railways that you mentioned, the operating ratio was close to 94%, which means the railways was just charging a tariff, paying salaries and just running the trains. There was no investment going into infrastructure. There was no investment going into railway safety. There was no. So with great difficulty, the railway minister said, well, I am not going to start any new project. I am going to concentrate on existing projects and strengthening the existing infrastructure. And therefore, he's brought back the operating ratio down into the 80s. And I'm sure next year it will improve further, where he can think of further expansion. So we are going to looking at that sector. Similarly, the other two areas that you mentioned, the highways, as far as the current award of the highways is concerned, it's quite expeditious. And those projects have actually taken off. It's the legacy issues, the mess on my table that I inherited in terms of the highways, where I gave you this illustration of you award 77 projects and then say I'll do 20 kilometers a day, and eventually 35 of them don't even take off. And therefore, how to get them to exit? And there's a complicated legal methodology of exit, because they have all to pay huge penalties to exit. So a dying sector is killed further if you try and enforce that. And therefore, you have to formalize a proper methodology by which they can exit, and those who can execute those projects actually are able to come in. So a number of those projects have been started. Some of them which are halfway through, I think we need to put some lifeline into them, and we're seriously looking at it.
When you say you need to put a lifeline into them, sir, what do you mean exactly?
Well, the system, and that is where additional public expenditure. And therefore, if you have seen the proposals in the current budget, besides enhancing the budgetary support as far as the highways is concerned, I had towards a few months ago, the one part of the benefit of the reduction of the oil prices had been passed on to the National Highway Authority.
Right.
In my finance bill, there is now a proposal to pass on a substantial part in terms of cess for highway authorities. It is going to go up to almost 8 rupees. And 8 rupees on that cess actually means 80,000 crores going into the National Highway Authority.
Right.
Part of it, I think, goes into the railways also. And therefore, when you have a highway authority which probably has an improved liquidity, so these incomplete projects can also be assisted by them. There's some funding mechanism. There are a lot of decisions which the Highway Ministry is taking. I had a detailed presentation with them today. Defense is one sector which I'm tending to become a little optimistic, because there's a flurry of activity as far as defense is concerned.
When you say a flurry of activity, do you mean interest from foreign sector investors to invest in defense, or are you also talking about procurement policy being changed?
No. You see, your foreign investors partnering domestic manufacturers. Takeovers have started. Large groups are now taking interest in entering that particular field. And therefore, what was an area where there was hardly any manufacturing except some of the public sector companies and one or two private sector companies, I think that activity itself has been launched.
Okay.
And therefore, a lot of liquidity getting into railways, highways, maybe ports, after the corporatization of the ports takes place. I think I do expect at that stage, once the economic activity builds up further, that private sector in India is very entrepreneurial. And therefore, I don't seriously expect them to suddenly raise a fund and say, I will build infrastructure. It's the first responsibility of the government, particularly when you are trying to get out of a slowdown phase.
Right.
I'm quite conscious of that. And therefore, it's at some stage, the private sector has to come and do its little.
I'm going to get Mr. Smajda and Mr. Singh into this conversation, but a final question from me before I bring them in, sir, as far as strategic disinvestments are concerned. Because you were talking about ideas for revenue mobilization, you talked about the auctions on spectrum as well as coal. You talked about strategic divestments in your budget, and a short while ago you told us that taxpayer money cannot go perpetually into funding loss-making public sector units. What are we to understand when this government talks about strategic divestments? Are we talking about the government giving up management control, as you did in the cases of AZL and Balco? What does strategic divestment mean? How soon do we see you start?
I have fixed a large target this year. Even though in the current year, that's the current year which is coming to an end, I was not able to reach the final target I had set, but in terms of numbers, this is the highest ever disinvestment in terms of numbers which has taken place in any year. And therefore, I intend stepping it up the next year. There are a large number of companies that we have. And when I mentioned the word strategic disinvestment, You see, it has a broad meaning. I'm not going to give a clue because, you see, the moment you indicate companies, then a lot of...
Don't name the company, sir, but are you willing to give up management control?
But obviously, you see, in a strategic disinvestment, that's what it means. Supposing a completely loss-making unit which a government cannot at all revive. This is only illustrative. It's not only going to be restricted to loss-making, but I'm giving you that example. Can I say that I want to divest, but I'll still keep control and the taxpayer will continue to fund those areas? It obviously can't happen.
So when do we see this list being drawn up, sir, of strategic divestments that you're going to
Well, the
make?
list has been drawn up. It's just that you don't know about it.
Okay. I tried my best. Mr. Smajda, over to you for the question, sir.
Thank you. Mr. Minister, first of all, congratulations for your actions, for the actions of the government, and for the budget which was presented. I think it is a tremendous signal that India is truly open for business. So congratulations for that. I would like to come back to the emphasis you put in your remarks about the agricultural sector and the industrial manufacturing sector. And in fact, I think these are truly the right priorities that you are addressing. Now, India is the fastest growing economy in the world, replacing China in this kind of category. China is today about $10 trillion GDP in dollars terms. India might be around $2.3 trillion in US terms. China has achieved this amount of GDP level, being able at 10% growth a year to double GDP every 7 years, more or less. India is today at 7.5 if I look at the forecast. How do you plan to get from the 7.5, say, to the 10% that will allow this kind of catch-up growth, doubling GDP every 7 years? What, in addition to the kind of orientations that you have set, what is the extra effort, what is the additional elements that will need to be added in the coming period to get from the 7.5 to sustainable 10% a year?